So there we go. So in this class, I'll be basically talking about the nature of the market and the structure, of course, according to the previous class. Of course, I talked about candlesticks, and now you treat them like in conference with the support and resistance, things like that. So in this video, I'll be basically talking about on a new subject, which is understanding the nature of the market and the structure of the market, because this is where the secret lies, like what a trader understanding how the market goes about, like how the market moves, especially that we are dealing with the volatility indices, things like that. So one of the things that you have to know is that the market moves in series of impulses and collections, things like that. So this is one of the most thing that you're going to observe, like in the market, in as much as the market can be in an uptrend or in a downtrend, things like that. You're going to experience that. In as much as it is going down, it don't just go directly to your destination. You're going to find that the market is fond of making these impulsive movements and corrective movement, things like that. So when we're talking about us understanding the nature of the market and the structure of the market, we are talking about the moves that the market is fond of making, because this is where the secret lies, like us understanding how the market operates, how the market behaves, like us understanding the behaviors of the market. Of course, as most of the people say, history repeats itself, things like that. So even when it comes to the market, there is what we call price data. So looking at the past performance of these volatility indices, and of course financial instruments, things like that, we usually find that these things, they just happen like like they repeat themselves, things like that. I'll just put it in that way. So when we're talking about the nature of the market and the structure, we're talking about structures that have proved to be of course like according to the bias, like that, things that have proved to be profitable to us traders. Of course, no strategy can be 100% like accurate in terms of accuracy, things like that. So once you understand the nature of the market and the structure of the market, it really it really amplifies your trading, like in terms of profitable, like you being a profitable trader, things like that. So the market moves in series of impulsive and correction, and this is one of the most important thing that we have to understand when it comes to the market and the structure, things like that. So us understanding that the market moves in a series of impulsive and correction, this is one of the most thing, whether the market is in an uptrend or downtrend, like it's just the same. You're going to notice that the market is fond of making the same moves. It's either it's making correction, or it's either it's moving in an impulsive way. So us understanding where the market is at that point really it's going to favor, like it's going to eat up, or rather say it's going to increase our winning rate, like in terms of trading. Why? Because we're able to understand the market, we are able to understand the nature of the market, and we're also able to understand the structures that often we see in the market, things like that. So market moving in impulsive movements and corrective movement, this is one of the things that we have observed since we're dealing with buyers and sellers. So looking at the nature of the market and price moving in corrective form and also moving in impulsive forms, we have got two types of market nature, like in terms of when we talk of price moving in impulsive and correction. Of course, we've got an impulsive type of a market. So in this case, just say an impulsive type of a market. So we've got an impulsive type of a market, got an impulsive type of market, and the corrective. So the market, as we look into the market, especially that we're dealing with volatility indices, you knowing as a trader, you knowing where the market is, things like that is going to really help you a lot, like in terms of trading. And like this is I would let us say like this topic is what is going to determine whether you're going to be a profitable trader or you're not going to be a profitable trader, things like that. So it moves in impulsive moves. So we've got impulsive moves and we've got corrective moves. But in order for us to understand this corrective, we have to understand also the structure, like market structure. In as much as we know that, okay, the price is either it's going to be moving in an impulsive move or corrective move, uh, things like that, we just have to understand the structure, because looking at the price data and everything that happens in the market, like the market is fond of repeating itself, be it when it comes to like trading patterns, because when we're talking about structures like market structures, we are talking about patterns. Like these are patterns that over time the price, like the market, things like that, it is fond of making those structures. So when we're talking about structures, we are talking about patterns, like patterns that the forex market, or rather say volatility indices, they often tend to give to us trader. Of course, there are a lot of things that control the market, or rather say that affect the market. Of course, we've got mass psychology. So according to mass psychology, it has been proved that uh, uh, it has been proved that most of the people, like when they're trading with the mass psychology, like depending on how many are buying or how many are selling, things like that, people have kind of come up with things, or let us say things that they have observed, like us traders, things that we have observed, like it really happens like most of the times. And these are patterns that I'm kind of referring to. So we're going to find that mass psychology, it deals with what traders are thinking, and over a long period of time, of course, a human being is of course has got feelings, things like that, emotions and everything, things like that, that controls a human being. So when we're dealing with mass psychology, we're dealing with those things like that. So without even wasting much of the time, so in this class, these are the topics that I'm going to kind of focus on, about market moving in impulsive movement, and market moving in corrective movement, and also patterns. So when we're talking about the nature of the market, we're talking about these impulsive movement and correction. These are the things that you're going to observe. Like most of the time, it's like each and every day you open up the chart, you're going to see market doing the same thing. It's either the market is in an impulsive, or it's either the market is correcting. Of course, I'm just going to go to the chart and show you this from the chart. So the basic thing on us understanding the market, like the structure, is that I would rather say I like this theory, which says everything which goes up comes down. Like that's a law of gravity. So like that same thing applies when it comes to the market. The market cannot be just buying. The market cannot be just buying. Like for instance, I'll give an example. Bitcoin cannot just be buying as much as we can project. Like it has got the possibility of it going probably 100,000 USD, things like that. So that's what happens in the market. You're going to find that the market won't just go straight. If it was selling, it won't just go straight. It will find certain structures that is going to kind of prevent it from just going just that straight, things like that. So we're going to experience a lot of corrective movement and impulsive movement. So let me just share the screen, my trading platform, then we take it from there. So this is VIX 75, of which we are on. This is 30 minutes time frame. And of course, when I talked about price moving in impulsive movement and us understanding the corrective movement of the market, this is what we are referring to. So we're going to notice that the price moved to the downside, then later on it moved to the upside, then things like that move to that, things like that. Like the market just doing one and the same thing, things like that. So this is what I'm referring to when I'm talking of us understanding the nature of the market and also understanding uh, the structure of the market. So when we talk of us understanding the structure of the market, we are referring to as the behavioral patterns that the market often tends to do. So if we look at this 75 volatility 75, we're going to notice the market is just doing one and the same thing. Like we are able to see some corrective movement, then also able to see some impulsive movement, just like that, until it goes to the true direction of the trend, is like that, because we're dealing with a trend. Like if we take a good look at that, we're going to observe like the market from here, it has been trending to the downside. Like if you look at that, of course, if I draw my trend just like that, or if I kind of lift it up, things like that, we're going to see that the market was moving in a downtrend, things like that. So the market was, of course, moving in impulsive and corrective movement. So this is what we are referring to when we talk of us understanding the nature of the market. Of course, we can even go further into the past data, things like that, just to see this behavior of the market. You're going to notice that the market just does one and the same thing, like over a period of time. If you look at it, so I'm just going to illustrate on this one. Like if we look at that, you're going to notice that the market, even over here, it was just doing one and the same thing. Of course, we add an impulsive movement, then also add a corrective movement and another impulsive movement, even minor impulsive movements, then we got corrective movement. So in other ways, us understanding these impulsive movement, what we are saying is that the market doesn't just go straight to the destination, things like that. It has got definite structures. This is why I've even combined talking about the structure and the nature of the market, because they work hand in hand. So of course, the market was consolidating in this area. So whether the market is trending or the market is consolidating, so what will differ of the market consolidating? Let me just give an example, like this type of structure. So let's say we've got that box, like let's say just that box, then we see that the price is kind of um, like praying in this kind of a box that looks like a box. This is what we refer to as a ranging type of a market. Things like when you have something like that. So of course, you can be buying. Of course, this is acting as your potential support. So when we talk about structures, we are talking of structures like potential support and potential resistance zones, things like that. So us understanding the market, like the behavior of the market and the nature of the market, is going to make things easy to understand whether we need to buy or whether we need to sell, because the most important thing that is important for you as a trader is just for you to identify at which phase is the market. Is the market in a corrective form, or is the market moving to the impulsive form? So we're dealing with impulsive movement, and we're dealing with corrective movement, things like that. So these are the nature of the market that we are going to observe, like you're going to observe like throughout your trading career. Like this is uh more, this is the structure, or let us say the structure of the market. The market cannot be just be buying, the market cannot be just be selling, is like that. In as much as you can have your uptrend, like the market has been bullish for some time, of course, as I said, the market cannot be just be buying, and the market cannot be just be selling. There are obvious points where you're going to notice that the market is kind of selling. So if you look at that, just drawn up a trend. So we had over there, we had our uptrend, things like that. The market was going up, and of course, in as much as the market was going up, we had some corrective moves, and also had some impulsive moves. Of course, some were a little bit like small impulsive move, things like that. So that's just the nature of the market. Of course, you're going to observe the market making those big impulsive movements, and also making those simple, let us say, making simple moves, like minor moves, things like that. So that's what I mean when I talk about that. So looking at that, if we take into consideration of us trading the same strategy of the bounce and retest, things like that, it doesn't really change. Like there's no difference. Like that's the, I would rather say that's the key. That's the key point when it comes to trading. Things like that, support and resistance. Now in this case, we are just dealing it. We're dealing. We are using just higher information of how we trade these things, like an advanced way of trading this thing. So that's all about the support and resistance, and also the impulsive and corrective moves. So in this class, I just wanted you to understand the nature of the market, and of course, the correct, like the structure of the market. Of course, I didn't touch about the structure of the market that deep, so I'm just going to make like a touch of maybe two or three things, things like that. So when we're talking about the structure of the market, of course, as I said earlier on, like at the beginning, I said when we're dealing with the structure of the market, we are dealing with things like, for instance, the support and resistance, things like that. Those are potential level structures where price like is fond of making or reacting to those levels of structure. So as I said, like when it comes to trading support and resistance, of course, I'm not going to go through that. Of course, in the last class, I talked about how you trade them using the bounce and the retest, and also the breakout. So that's our strategy. In other words, when it comes to trading the market using price action. Of course, there are indicators that you can use, like we've got moving averages, things like that, that can help you predict of course, trade the market successfully, things like that. So in this case, as I said earlier on, of course, there are structures, and one of these structures in the market that we have, of course, I'll do a part two of this same class. Then later on, focus on the structure, because it's quite a huge thing. So, but I'll just do an intro in the same this class, because I'm talking about structures. So one of the structures that we have seen throughout the market, like it's it's like in most of the time, like you be able to see while you're trading. So one of the structure is the double bottom. So double bottom on top, this is one of the first structure which is common in the market, double bottom. So just say double bottom, and double bottom or double top. So just to save some time, I'm just going to abbreviate that. So I'm just going to say D top. So which is just the same as double top and the double bottom. So that's the first structure of the market that the market is fond of using. So we've got a double top and or let's say a double bottom. Then the second thing that we're going to look at in the next class, we're going to look at the frag. And also we're going to look at probably number 3, we're going to look at the rectangle. Of course, this is a continuation pattern, like chart pattern. So we're going to look at the rectangle. Then of course we're going to look at the wedge. So these are the most things that we are going to experience, like when we look at the structure of the market. So these are the most things that we're going to experience, like throughout trading, like when it comes to trading volatility indices. Like these are the, I would rather say, the top patterns or market structures that often repeats themselves, like on several points, in whether the market is going up or the market is going down. So I'll touch that on the next class. So this is just an introduction of what I'm going to talk about in the next class. If you've got any question about what I talked about, the support, sorry, about the corrective movement and the passive movement of the market, like us understanding the structure of the market and us understanding the nature of the market. So that's the nature of the market. In as much as the market is moving up or moving down, things like that, cannot just be buying, cannot be just buying forever. It has to reach a certain point where it has to reverse. So this is where now we get to see like categorize these things, like in terms of us having reversal patterns, us having continuation patterns and everything. But your success lies in you understanding the structure of the market. And one of the structure of the market, as I said, is that the market moves in impulsive movement and corrective movement. Whether we are in a bullish trend or we are in a bearish trend, you're going to find that the market is fond of doing one and the same thing. So our job as traders is for us to identify at which point, like at which phrase are we in the market, in order for us to have a good win rate, because no strategy is 100%, things like that. So if you look at that, you're going to understand that the market, after making an impulsive movement, it has to correct. So in other words, it's just like us human beings, where we say we inhale and exhale. So that's the same nature of the market. The market inhales, exhales, inhales, exhales, inhale, exhales. So that's the nature of the market. The market makes an impulsive, then it corrects. It makes an impulsive, it corrects. It makes like it inhales, then exhales. It gets inhaled, then it kinds of excels. So that's the nature of the market. Like throughout, the market is either going to make an impulsive movement, like as we look at a V75, the market is going to the upside. Of course, if we use that in conference with trend lines, you're going to find that the market has been moving to the downside until it reached a point where it had broken that level, things like that. If you look at that, then we are, of course, this should be our double bottom. Then the market just went like that. So this is the simplest way of trying to explain the nature of the market and also the structure of the market. So at any point, at any in this that you will encounter, like try to trade, these are the most important things that you have to look into, like when analyzing the market. Of course, everything is based on our analysis. So how accurate we are with our analysis is going to determine how successful our trades are going to turn out to be. So in the next class, of course, I'll just do a part two of this, talking about market structures and go deeper into there. Then we see how far we're going to go. So if you've got any questions, you can DM me, you can contact me regarding this class.